Hello everybody, Jackson here with the Wealth Squad today talking about the stock market. So looking at the stock market right now, you can see that we did bounce on Friday today at 2.39%. That's how much the S&P 500 index fund gained, or just the S&P 500 in general. We're looking at the year chart right now. You can see we're the lowest it's been in a year. Buying at these prices is not crazy just because we had a good day. So what I would recommend to you is to dollar cost average even more, which means instead of monthly, turn it to bi-weekly, turn it to weekly. Maybe it could be the same amount, if it was 200 bucks a month, do it 50 bucks a week, something like that, to where it breaks down evenly. But you want to be sure to get in at these lower prices instead of one, two, three. You could do 1, 2, 3, 4, 5, 6, 7, 8, but the same amount, same dollar amount invested. That would ensure you, at least starting now, to get that cheaper prices in to your cost basis. So that is the SP 500. Now we can check out the NASDAQ, which is down significantly more. We're looking at from the peak down 26% from the highs. Once $400, now 300. Not the best start to the year. Actually, one of the worst in history. 2022 is for the stock market, and that's just considering stocks. We haven't even talked about crypto yet, but stocks not doing very hot. Some key notes: Facebook not doing very well. You can see the last time as this price was during COVID. We could check out Amazon. Last time as this price was during COVID. We could check out Google. Google's still doing relatively well. Netflix, obviously, one of the worst performing stocks recently. Last time this price was 2017. So 5 years of gains wiped out in a matter of October to now. So in half a year or so, the stock fell 70 to 80% and wiped out 55 years of gains. So what is this telling you? This is telling you to take some profit, sell your winners. Not all of them, of course, the ones that are overextended. You can see Netflix had a tough time battling up and down, up and down, up and down, and then finally we took off from 500 to 700. This is all while competitors are growing against Amazon. I'm sorry, Netflix. So while you have Netflix at all-time highs and competitors at all-time high, it may be wise to take a few shares off the table. Hopefully you did that because you would not like to hold through this. No one would. Um, and that is Netflix. There's some other examples like this. Shopify. You can see right here, Shopify doing the same thing. Last price is the same as August 2019, before COVID was even a question. The stock took off from 300 to 17 to 1800. Now it's back down to 300. The question is, are you too scared to buy, or are you buying and waiting? Buying and waiting is the best thing to do, especially in the beaten down stocks like these. I'm telling you right now, stocks like Sea Limited are going to do way better than Apple if the market recovers, because Apple has only fallen, maybe 10%, 20 max. This has fallen from 370 to under 70. Around 80% Sea Limited has fallen. Once the darling tech stocks of every tech investor, now one of the worst performing stocks of the last year. So it's up to you to decide what you want to invest in. I will recommend to invest in the riskier stuff. Maybe not all the way, maybe not put your life savings in there, but at least allocate some percentage there, because that's going to bounce back the most when the market does. That's just fact. So let me know what you think of this strategy, buying the risky stuff when the market dumps and hoping for a rebound, because stuff like this is not going to return 10% a year. it's going to go from 70 maybe 200, right, within a year. That gives you a great percentage gain and a great dollar gain. So let me know what you think of that. That's the strategy I would recommend. But that's the video. Thank you for watching.